A couple other points to note. On the natural gas market, obviously natural gas prices have been much more depressed than oil prices this year. Really haven't seen the huge bounce back that oil has in 2009. However, that said, we have seen somewhat of life in that market here over the last several months. Remember, at the end of August, early September, near-term spot natural gas prices were down around $2 for a million BTUs. Now, the 12-month strip, which is the average of the next 12 months' worth of natural gas prices, is up around $5.50, even been as high as $6 in the month of October. So that is a significant improvement. What I've heard from a lot of the natural gas-focused services companies is that they're seeing an uptick in activity in some of the premier shale plays in the United States. Now that would include gas fields like the Haynesville Shale of Louisiana and the Marcellus Shale of Appalachia. So we're not seeing a lot of activity in conventional natural gas plays, the ones that have been in production for many, many years. We are seeing some renewed interest and some new uptick in activity in these shale plays. So companies that sell premium products that are required to produce these shales, these natural gas shales, are doing quite well, even though the market at large looks pretty depressed. That's another area to keep an eye on. A final area to talk about on the energy front is coal, Australia, and China. I'm sure most investors noticed that over the past month alone, Australia has actually hiked interest rates twice by a total of 50 basis points, 0.5%, in two 1/4 point hikes. This is the first G20 nation, the first really developed country to start taking back the monetary easing that we saw put in place last year to try to stimulate the economy out of the worst recession in decades. That's really a sign that the Australian economy is picking back up more quickly than most of your other developed country economies. Now, why is that? Now, the reason is that Australia is a natural resource-based economy. They produce everything from oil to natural gas to coal to iron ore to copper. Most of that ends up getting exported outside of Australia. Australia has a very small population, but a lot of natural resources. And in many cases, those resources are being exported to mainly China, India, other developing countries where the demand is very, very strong. So what that's telling me is the fact that the Australian economy is actually looking to overheat a little bit. According to their price indices, for example, residential home prices in Australia are actually at new all-time highs. So unlike the rest of the developed world, they're not really still dealing with a hangover from the housing boom. They're actually seeing new highs in their property prices. The reason the Australian economy is doing so well that they have to raise interest rates, worry about a bubble forming in the real estate economy, is because they have this huge export business to China. And what that's really telling you is that the Chinese and Indian economies are really coming back into growth mode. Obviously, we've seen a lot of data to suggest that all year, but here's real evidence coming from actual demand pull-through into the Australian economy. On the energy front, one of the key areas to watch in Australia is the coal sector. One of the stocks I have been recommending for a long time in the Energy Strategist has been a company called Felix Resources. It's a smaller Australian coal company. I recommended it several months ago. Since then, it has received a takeover offer from Yangzhou Coal, which is a big Chinese coal mining firm. I actually have it as a hold right now, so don't run out and buy it. The reason being because it's about to be taken over. But what this shows you is that Chinese companies are extremely interested in buying up Australian coal reserves. So one of the key things I'm looking at is look in Australia. In the next issue of the Energy Strategist, I'm going to talk a lot more about Australia. What are the companies in Australia that have the resources that are of interest to China? All of these companies are takeover targets, and even if they're not taken over, they're going to benefit a lot from booming demand from China because they're going to be the companies that have the resources to export into the Chinese economy. And one of the key markets to watch, again, is coal. Not just Australian companies that own coal in Australia, but also U.S. and European companies that have assets in Australia. They're going to really benefit from this booming demand for coal. Thank you very much.